FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. And, well, the precious metals market's been going sideways recently. Wonder why? Right now, it's just over $1,500 the ounce. Silver's trading in that mid $17 range. But we're in quarter 4, and that could mean that there is a big rally ahead. Peter Hugg over at Kitco, he's saying $1,550 silver. I've got other people as credible or more so than Peter, and they are at the $1,800 range. Either way, it looks like it's going higher for sure. Hey, what do you think the price of gold is going to be? Tell me, send me an email, kl@kerrylutz.com. What's your guess? We're going to be having a contest for that shortly. And so save your prediction for now. But if you got a question or an opinion, please email me, kl@kerrylutz.com. Well, our good friend David Morgan is with us now. You find him at the morganreport.com. You know, David has been into silver since they demonetized it in the 60s, maybe even before that. One of the foremost experts in silver and all around straight shooter from his report. Anything he says there, he's telling you from the heart. It's not like he's getting paid to tell you, which there's nothing wrong with as long as it's a company that you would invest in anyway. But David, it's great to have you back. And these are interesting times, aren't they?
Well, indeed they are, Kerry. It's really refreshing to see that gold finally made a 6-year high not that long ago. We broke out in early June at the 1,300 level. I said we had to get through 1,350, and we did that near the end of June. And we shot up to 1,550. So we had a $200 move on a $1,300 base or 1,350. So pretty high percentage return over about 3 months. And then since that time, my report came out on the 3rd of September. Of course, that was the September issue, and then the October issue has already been out for a while. Point being that on the 3rd of September, I said, okay, folks, for the trading portion, which I do on position trading, which means, hopefully weeks or months. So it went from 1,350 to 1,550. I said, you should lighten up or hedge on part of your positions right now. Put it in writing, and some folks that subscribed did, and some folks that subscribed chose not to. Regardless, it was like a perfect call. Yeah. And so now we're consolidating around the 1,500 level, and many of us believe that it's going to stay there and move higher. I think it's going to go lower and then go higher. I think we could get down another $50 or so. I don't know. The market knows more than any of us. One of my favorite expressions. I'll stick to it because that's the truth. But I don't like the action in the market right now. We've got a lot of fundamental facts that should be pushing gold higher, and it is not reacting to it. Furthermore, the Commitment of Traders report does not look all that favorable for higher prices. It looks more favorable toward lower prices. So based on my experience and the way I look at the market, I'm forecasting to see a little more weakness in the market in the nearer term. Could we hit 1,800 by the end of the year? It's possible. Will we? I doubt it. I think we could hit 1,450. There is some resistance at the 1,500 level, if I am correct. That will stall it out for a while. Then we have to break out to the 1,550 level, which is the, recent new high, and it could. But I would be surprised if we get anything above 1,600 by the end of the year. We might still stay in some trading range over the next, November, December. I mean, I got to remember there's only a couple months left. So I call them as I see them, and I correct myself when the market tells me more. For example, let's say something big happens in the Middle East and all of a sudden we get up limit in gold 3 days in a row. Believe me, I'd be doing an alert for my paid members immediately and tell them how to react to that, significant event. But barring something like that, I just outlined the way I think the market's going to go for the next couple of months.
Interesting. Well, the fundamental case for precious metals has really been pretty solid for the past 8 years, David. Really has. But the technical case for it has been lacking, and the cycles, the technicals, for a while anyway, they rule.
They do. I mean, you're absolutely right. I mean, the case for gold just got stronger and stronger over the last 8 years. I agree with you completely. And, are these markets manipulated? And the answer is yes. I mean, I did a whole chapter or two about it in my book, The Silver Manifesto, and we touched on it briefly in the next book, Second Chance. And I don't like playing the manipulation card, but I have to back up and tell you, Kerry, I have to admit I was wrong again. I mean, basically, from 2000 to 2011, we had an 11-year bull market in gold. Year over year, it was always higher. Silver did a similar pattern, not quite exactly. And when I was asked about manipulation, I would say that, yes, the markets are manipulated, but you cannot manipulate the overall trend. The overall trend is up, and that was a pretty much true statement for 11 years. I did expect a correction. I called that top. I said take profits. What I didn't expect was, 6, 7, 8 years of misery.
Yeah.
And I am inclined now to say you can manipulate the overall trend. I think in a normal bull market, it would have been what I said at the beginning. And it's not about me. It's about how markets move. And it would have been like maybe a 2-year sideways to down situation, reconsolidation, and another move up. And it wasn't. It was year over year over year over year. So I am more inclined to say I might have been right back in 2000 on up to the top, but over this sideways market, I'm more inclined to say, no, you can manipulate the overall trend. I mean, another way to look at it is that gold, traded in this trading range at a fairly good level relative to the amount of attacks that were foisted against it all those years. In other words, getting punched by a heavyweight and you're a lightweight in the ring time after time after time, and you're still standing is actually significant. And I look at it kind of like that. I mean, these guys have thrown everything that they can at it. And yes, it did react. And yes, it did go down, but probably not as much as they were hoping for. So that's, looking at kind of both sides of it. I'm convinced that we're back reestablishing a bull market, whether, the powers will be able to let it go or not. I'm firmly convinced that there will come a time when they don't have control, because the physical market will overrule the paper paradigm at some point. Once that happens, I don't know what they're going to do, but I know what the market will do, and it'll go significantly higher.
Hey, and there are signs that the central banks' control, particularly the Fed, is weakening, if not breaking. I mean, we look at the repo market. I know you out there, we've talked a lot about it. I've devoted significant shows to it because I think it's so important. And really, that's just an indicator of potential loss of control, the inability to keep what's a very staid market, keep it afloat, is telling me that it's possible that there could be a couple of banks that are on the skids that need to be bailed out, or I don't know what they're going to do. Deutsche Bank certainly comes to mind. Other banks, who knows? It's
yeah, no, you're right. I mean, there's all kinds of problems in the markets. And there are banks that are totally insolvent. I mean, this is a big concern, what you just outlined. I won't go further because I've talked about it. I've written about it in the report and publicly, and it's almost been overdone. There's been so many articles and commentary about it. The bottom line is it is a big concern. And are we at another 2007-8 tipping point? And the answer is it sure looks like we could be.
Yeah. I think with what's happening, there's a high degree of uncertainty. And like I say, that market is so staid, it should have never, ever. I mean, that's our good friend, our mutual friend, Daryl Schoon calls the repo market the pawn shop for banks. And, they post their collateral. Well, if some of them posted the collateral, but normally they keep it in a custody account, and they did it for a few different banks, like kind of a la MFS Global, we could be facing a really serious situation that nobody knows how to fix. But even if we're not, I tend to agree. So there's been this rumor circulating, David, and you're probably the best person to address it, that there's a shortage of silver. Is that the case?
FSN Radio. It's all about what What's next?
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
No, as far as I can determine, it is not. I actually have one of my members that's in Switzerland, which is where most of the gold in the world is refined, claim that I believe him. I mean, he said that he had a pretty good source claiming that silver's in short supply. So I looked into it. I mean, I'm pretty well connected, as you know, and looked at the major refineries, and there are some issues surrounding the Sunshine Mint and their minting of the planchettes, the blanks for the United States Mint and actually for the Canadian Mint as well. And but that's a separate issue. That's not a silver shortage. That's a problem you can address. I don't want to speak for the company, but that could be conceived as being a silver shortage when it's really a financial problem with the company. But back to the point, no, there isn't right now from the commercial side, which is the silver market. I mean, let's face it, when you're in the futures market that determines the price, right or wrong, that's how it's determined, and that's for commercial bars, which are 1,000-ounce bars. And anyone that knows the market knows that they're not exactly 1,000 ounces. They're rough pours, and they vary between 990 ounces to 1,005 or so. They're pretty close to 1,000 ounces, but they're never sure, randomly you'll get one that's exactly 1,000 ounces. Mm-hmm. So there is no shortage of those. I mean, just like when we did have the shortage in 2008 at the bottom of the financial crisis, there was certainly a shortage of silver in the retail market. 100-ounce bars, 1-ounce rounds, 1-ounce government coins, 10-ounce bars, and even 100-ounce bars. But there was no shortage of silver, meaning commercial bars. So there was a huge arbitrage available, and I wrote about it both privately and publicly. And most of the silver bulls, and I'm certainly a silver bull, but a lot of them were saying, this is it, the market's going to blow up, and we're going to see this huge increase in the silver price. And I said, I disagree. You're going to see the silver price come back down to the retail silver price come back down to the commercial bar price. And that's what happened.
Yeah, funny how that works. So we never quite hit $20 this rally, but we're still approaching the best seasonal time for precious metals, mainly Q4, getting to November, and then mid-December, and then the first quarter, of course, January and February.
Yeah, you're right, Kerry. In fact, it was probably one of the best seasonalities out there. Looking at, sugar or cocoa or cotton or the ags that have certain seasonalities. Unfortunately, it's broken down somewhat. If you go back in recent history, meaning the last decade, there's been a few years where the lowest print for the year was the last trading day of the year. So in other words, December something was the lowest price for gold or silver or both for the whole year. So the seasonality is not as strong as it used to be previous 10 years, going backward from that point. Mm-hmm. Nonetheless, the seasonality is more favorable than unfavorable. So you're correct. It's just not quite as good as it used to be. But I do think that you should prepare for a rally. And January has been really strong seasonality for all the metals for quite some time. I won't say famous. Nobody knew me back then. I'm famous now, but I used to trade the whites almost every January and put some pretty good money in my pocket. I always went long platinum and palladium or one or the other or both almost every January. And you can almost set your watch on that. Now that I've said it, it'll probably get tanked. But I used to love to play that market, very thin market. I'm not making a recommendation. I'm just telling you what I did. And I may be doing it again this year. I'm not sure. But I think, you want to trade from the long side. I mean, if you want to go both ways, that's your business. But as far as I'm concerned, you really, from this point forward, you only want to trade the metals from the long side. You don't want to get cute. I think we're certainly reestablishing a bull market, as I've already said a couple times on your show, Kerry.
Yeah, and I'm inclined to agree with you. I mean, when you look at it, like we said, the the fundamental case has been there for 10 years already or longer, but the actual technical case is now coming around. So we're not seeing, like, let's say this, we're not seeing like a breakout at this point. It retraced. Do you think that's a healthy sign for the market in this case? Yeah,
I do. I think the way we're trading right now is actually beneficial to the market. Once we get, moving up higher above 1550 in gold as an example, and once we finally get over 20 in the silver market, there will be a lot more people coming in the market, and a lot of the algorithms will become more favorably inclined to go long rather than short the metals. Of course, you never know. Well, I should say you have a pretty good ability to forecast ahead of time what the banks will do. I mean, even with the silver manipulation and pleading guilty and all that's gone on, that's now publicly out there, and people really can look and see that, yes, these markets are manipulated. People actually admitted it. Mm-hmm. Still has had little, if any, effect on the trading of these markets. I mean, they're still getting shorted like crazy. And really all that's happened from my perspective is that these banks have gotten a wrist slap and a fine, and no one's gone to jail. No one, and it's just very upsetting to me. But this isn't just the silver and gold markets. I mean, this is a reflection of society at large. I mean, you have criminal elements moving in throughout the government that basically don't have to pay a price for that. You get under the previous administration, the occupants of the White House at that time said, well, these banks that are not only too big to fail, they're too big to jail. What kind of statement is that?
That was Eric Holder's.
So we're focused on these small markets, which are important markets. Honest money to me is my life. But that's a subset of the whole overall system that's corrupt from top to bottom, pretty much.
Very, very true. And, I guess it's just going to go on until they can't make it happen anymore. The whole way that they're prosecuting the metals manipulation is like, not that it's part of an overall systemic thing that they're doing, but just that it was done kind of like sporadically just to make money on it. To make money on the trade, right? You know what I'm saying? They're not really prosecuting it as if there was, something major going on there, a major conspiracy, even though it's being brought under the RICO statute, supposedly, which I haven't seen, but all right, I'll take their word for it. It doesn't seem to have the gravity that we would like it to.
Right. Kerry, if you allow me, I'd like to back up a little bit about the repo crisis.
Yeah, sure. Let's talk about
if we go back into history, and, the Credit Stalt Bank was a meaningless little bank when it was really the trigger point or the tipping point for the Great Depression and the banking crisis. Well, we get such filtered news and mostly propaganda here in this country now that many people may not be aware of what's going on in India. So I just want to read you like 3 or 4 headlines, and you can do some further research. Just type in India banking crisis. But from Bloomberg, India shadow banking crisis far from over. Bitcoin news, bank crisis spreads in India. Death strikes Supreme Court. The banking sector is facing multiple challenges. Customers, several cooperative banks are still struggling to withdraw their money. Moneycontrol.com, PNC bank crisis. Your money is safe. RBI assures depositors. The Reserve Bank of India has assured depositors of a crisis hit, and it gives a couple of names I can't pronounce of large cities, that their money is safe. Yeah, but they can't withdraw it. And then lastly, from Telegraph India, PNC bank crisis. Money stuck. Trust lost. The Reserve Bank of India has clamped down on operations of the crisis hit. Again, those 2 large cities. for nearly a month. So there's a huge banking crisis going on in India, and hardly anyone even knows about it in this country. And my point being not only that that's very important to understand, but the question arises in my mind, is this another credit default bank situation for the globe that no one's paying attention to and kind of blowing off? Well, that's their problem, not ours.
Yeah.
Because all these banks are interconnected. There's no doubt about that.
Yes, they are with their derivatives exposure, all of that stuff. They're definitely connected. And I guess we're just going to have to wait for the house of dominoes to just fall down, because once one of them goes, they all go, right?
Yeah, I do truly believe that. I think, if Deutsche Bank was allowed to fail, I think it really should or could. If that were to happen, I think it would be systemic. And as you said, one domino hits two hits four hit eight. It's exponential on the downside. I mean, anyone that's ever traded the futures market like I have knows that leverage works great on the way up or the way down, depending on what your bet is. But if you're wrong on your bet on which way the market's going to move, a little move can be a lot of pain because of the leverage. And these banks are leveraged to the hilt. It's unbelievable how much leverage is in the system.
Yeah, there's no limit to leverage. They used to actually strictly limit the amount of leverage that a bank could undertake, but not so much anymore.
Yeah, I have to interject, and you're so correct. And one of the worst things, in my view, that ever happened in the financial system en masse, at large, on the aggregate, is the removal of the Glass-Steagall Act. I mean, if Glass-Steagall was still in place and commercial banks could not do anything but loan to, farms and mortgages and couldn't touch the investment side, we'd have a lot more stable banking system than we have now. But under a couple of occupants ago in the White House, the Treasury Secretary and the president at the time decided it would be great to let everybody gamble. I should rephrase it correctly. It would be great to let these banking entities gamble with everybody's money, which is what happened. And if things go wrong, like they did in 2008, well, who gets blamed for that? Not the people that caused the problem.
Capitalism.
Let's just take it back out of the depositors' hide.
The capitalism is at fault, even though we don't have capitalism and haven't had it in a long time, right?
Correct.
Yeah. So going ahead, you think it's just stay the course here?
Yeah, I think, you don't have to overreact. You want to live a good, decent life, be balanced and enjoy it. Try to spread some happiness and joy where you can and hedge. You don't need to agree with everything I say, but if any of it makes sense with what Kerry has outlined, what I've confirmed with him, then hedge. Take 10%, put it into, hard assets, and go about your life the way you see fit. I mean, I'm not a big doom and gloomer. I think there's going to be some major problems, and I don't really want to address those on this interview. But what I do want to say is, if I'm wrong, just being hedged isn't going to really hurt you very much. If you overdo it and you put your life savings in the metals and it goes sideways to down for 8 years, you're going to be very unhappy. But if you just had a hedge position during those 8 years and we're still in the stock market, you'd probably have a smile on your face right now.
Yeah, exactly. An insurance policy, as it were. All right. Well, the place to go to find David's work is themorganreport.com. And it's always a pleasure having you, David. And anybody email us what you think about David's thesis here. The email address is kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page is Financial Survival Network, and the website's financialsurvivalnetwork.com. David, we'll talk to you again real soon.
Thank you, Kerry. It's great to be with you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.